Today, you'd like to learn about how is the tax credits for your investment, for your family, or for your housing benefits. Let's talk about tax credits, the ultimate financial cheat code that wipe out your tax bill dollar for dollar using family and housing aids. Credits versus deductions. Before we dive in, you need to know why tax credits are absolute gold, while deduction only lower your tax incomes. Credit directly slash your final tax bill. Deduction reduce incomes. Credit reduce tax. And refundable magic. Some special credit can even give you a cash refund if your tax bill is zero. Again, deduction reduce your income. Credit reduce your tax. If you know how to use these two things, you could get much more money in your pockets. Let's take a formula and the government subsides. Final tax out. What is the formula used to calculate the final tax out? Initial tax bill minus total tax credit. Your true bottom line payment to the IRS. Child tax credit. Qualifying children multiplied by credit amount per child. Energy efficient home. Equipment costs multiplied by 30% allowed rates. And the child and the dependence care. Daycare expense multiplied by allowed percentage. Why claim family and housing aids? The government used tax code to encourage things like raising kids and upgrading house. Millions of families miss out on these credits simply because they don't check the boxes. It is literally free money waiting for you. Missing out on eligible family credit means giving up $1,000 refund you legally earn. Let's take a theoretical calculation. The credit impact. How a typical family use a housing and a kid credits to completely erase their tax liabilities. In the first, let's see how is the initial tax bill out. 6,500. The child tax credit, we have two kids, 4,000. Daycare expense credit, 1,200. Solar panel installation credit, 1,300. Total combined tax credit, 6,500. Starting our amount, your initial calculation tax baseline is 6,500. Family credit impact, the initial 6,500 initial bill minus 400 $4,000 the kids credit, you take 2,500 left. So the current housing impact 2,500 left minus 1,200 the car minus 103,000 solar, we have $0. Your final tax bill owe you exactly $0 and completely protect your cash. Thinking about it, if you use a good credit, you could get a null tax, a zero tax. This is a simple calculations. Let's visualize your bill reductions. Interpreting the credit stack. Look at how your 6,500 bill break down the child tax credit knockout of 61% of it, daycare cover 19%, and our eco-friendly home upgrade handle the remaining 20%. By combining family and housing insensitive, you keep your hard-earned money in your bank account. Don't pay a tax. Stacking multiple credits together is the fastest way to drop your tax to bill to zero. Let's take a real life scenario. The new homeowner. Meet Tom and Elena. They're welcoming their first baby this year and also both a fixer-upper home. They spend money on a daycare so they could work and replace an old inefficient heat pump. They did not realize that their new heat pump qualified for an energy credit or that daycare cost counted. Claim this credit, put an extra 3,000 back into their budget for baby supply. First baby and daycare unlock both child tax and dependent car credit. Greenhouse upgrade claim 30% of heat pump cost as energy credit. Housing credit going green pay off. Maximizing residential aids. Renovating your home isn't just about comfort, it is a major tax saving strategy. The government rewards you heavily for making your living space energy efficiency. Energy efficiency home credits get up to an annual limit for a better window, door and installation. Residential clean energy credit, a massive credit with no dollar limit for solar panel or solar water heaters. First-time buyer program, look out for statement-specific tax certificate that reduce your mortgage tax early. What is the expert tips to claiming every dollars? Track your income fast. Keep an eye on limits. High earner might see this family credit gradually reduce and disappear. Save contractor invoice. Keep every single itemized invoice for home energy upgraded to prove the exact equipment costs. Get provider tax IDs. You strictly need your daycare provides AEN or Social Security number to claim the core credits. And check state level credit. Many local governments offer extra family and renters credit on top of federal options. What is the key takeaway? Credit target bills. Prioritize credit over deduction because they whip out your final tax debt dollar for dollar. Final family is an asset. Keep track of changing child credit age, rule and several official daycare payment history. Invest in efficiency. Let tax credit fund your home improvement project by picking qualified energy saving gear. File every form. Don't use basic tax form that skip credit. Use the right schedule to secure your money. When you align your family goals and housing choice with available tax credit, you are letting the system work for you, not against you. That's it the lesson for today, guys. Thank you very much, and I hope to see you in the next video. Don't hesitate to write in the comment if you have a question and click the bell to have a notification. See you soon.